Welcome back. John Payne and Naomi Bloom joining us. All right, before we get into the protein market and livestock, Naomi, this catastrophic flooding in southern Brazil. We talked about it last weekend. We're still trying to wrap our heads around it. But as we look at just the global supplies right now, do you think it's even going to make a dent in things?
I think it makes a dent in things as soon as the USDA admits that it needs to make a dent in things. The production numbers are going to be lower out of Brazil. There's just no way about it because of the flooding that's been there. There is some crop that still needed to get harvested. CONAB still says that their crop in Brazil is much lower than what the USDA is saying. So some of that, in a sense, is priced into the marketplace, but how much of a loss is going to be shown on upcoming USDA reports? We just need to be ready for anything in that capacity. The bigger thing with soybeans, though, just continues to be that even though we've got slow planting pace here, our export sales are not going phenomenally well, especially for the 24-25 crop year. China hasn't bought anything yet. So we need to see China step up to the plate and do some export sales here soon. And then we'll also start to see what piece that southern Brazil flooding plays into the market as well.
Yeah, and coming up later on the show, we're going to talk about those tariffs on China and potentially what impact it could have here on U.S. and commodity prices. But John, let's look at the livestock market, okay? Because beef trade, it continued to be quite robust ahead of the Memorial Day holiday. But how is beef demand specifically for restaurants?
Well, the restaurant index is rolling over. They're kind of getting hit by the double-sided move of wages going up. And then you're starting to see the economy stall out a little bit here, and they can't pass forward any prices. So, we've seen some big corporate chains go under here, Red Lobster being one of them. I think that'll continue to be a theme as we move forward. We had McDonald's earnings a couple of weeks ago that were poor, relative to what they've been. So I think at this point, there's definitely a yellow caution light flashing. When you look at the markets for hogs, bellies would be the one that you want to watch here. We've just struggled to get over 125, and I think the folks we work with think that 150 might be a bridge too far here, and that's, I think, priced into the summer hog markets. Now, it's not a time that you want to go out and forward price typically, and I'm not saying you need to sell today, but I think when you look at those Q4 markets, my bet is the producer has not backed off the supply to the tune that I think the estimates will be, and I think that's where there's some downside risk, especially in October and beyond into 2025.
Well, Naomi, the one bright spot in demand, cheese demand. Where is this coming from, and how is it impacting the milk markets?
Yeah, it's great news, especially, of course, as you know, I'm from Wisconsin. We are seeing cheese demand increase higher. We are seeing some of our local cheese production facilities pick up weekend shifts as the demand continues to improve. So I feel like it's partly, getting ready maybe for some graduation parties, getting ready for summer in general. And if you're going to try to maybe splurge on something with everything at the grocery store being expensive, putting out a nice cheese platter for an appetizer might be an appealing alternative. So we are thankful for it. And milk prices responding and staying above the $20 price point. So it has been a blessing. And we look forward to seeing continued cheese demand here, both domestically and on the export front.
Naomi, John, thank you so much. All right, we need to take a quick break, and then we're checking in with Machinery Pete for Tractor Tales next.